let's take a look at the disclaimer here. It's not the session, it's not a session to give you any financial advice. So it's purely educational. All right. So what I'll be covering today, number one is that I'll be doing the Hong Kong market. Uh, Hong Kong market is like a market or a trade that I've been talking about since the start of the year. Right. So I just want to update you on what I think about the Hong Kong market, about the broad factors. In here, I think there will be information that you don't find elsewhere. So if you liked it, remember to tap the YouTube link with a like. Okay, just press a like to this session. Okay, anytime that you feel that you have benefited, because it's gonna boost the content greatly. Second, it's about recession. So I'll be covering two things. One would be how to know that whether we are heading into recession, and then what would be some recession-proof, investment to do. All right. Just to let you know, in our community, we trade, or rather, we invest in a whole array of instruments, whether it is Forex, gold, oil, stocks, whether it is Hong Kong stocks, Singapore stocks, US stocks. We talk about it as long as it's within our system. Okay. And then towards the last part, of course, I have good deal to share with you. So don't miss out. Because the deal is going to end on the 30th of March. All right. So I'll be using this opportunity to sell you some products. But anyway, you can leave after I'm done, but try not to because I think you want to know the special deals. Okay. And also some developments going forward in our community. Okay, so this is me. I'm not showing myself. Do you want to see me? Because I just bathed. My hair is not air dry yet. Partly because it's gonna consume a lot of bandwidth, so I'm not showing myself. But this is me, right? Just for those who have been with me for a long, long time, I basically hasn't changed. If not, I've aged a little bit, and because of the aging, there are some changes in my views to the market or views to many things. I trade with partial automation, and we are going to launch the 100% automated robot very, very soon already. Yes, I also want to go traveling, and then hoping for something to just keep generating money for me. Okay. Can I retire already? Yes, I can. I tried to when I was 38 years old. So if you haven't seen me for a few years after I turned 38, that because I tried to retire, but I think that it's not something that I want to do. It's really boring. I love to talk. Love to speak. I love to interact with people. I can't just be looking at myself every day. Okay, so I really want to be with people. All right. Yes, do I trade the US market? Yes, I do. Do I do indexes, Forex go? Yes, I do. I almost do almost any instruments, okay, including Hong Kong and Singapore market. So later on, I'll be talking about Singapore market as well. Okay, so if you're interested, do let me know. Okay, so because of getting older, so I was older than yesterday, I was older than I was 10 years ago. I thought of what I wanted to do, so I really wanted to leave a legacy, and that's why you realize that we are working really very hard. So in Online Forex Master, which is a branch of TerraSeeds, we have two courses right now. One is the Top Plus and the Top Pro, and then we are basically doing 7 webinars a week, okay, shared between me and another trainer, Pauline. Later at night, she will be doing another sessions for our students. Okay, 7 coaching webinars means that almost every day we are doing one. Okay, we are doing, as what I say, all these instruments, and also the focus it's into automations, and automations doing system design it's my interest. Getting a trade right is my interest. Sharing with all of you is something that I like to do. For example, just after Chinese New Year, remember I went to look at Xiaopeng, all right? So I shared my photos with all of you, and that's really my interest to just look at cars, but for the sake of investing, okay? All right, so let's quickly answer whether Hong Kong is still bullish and whether it's a super bull. Now, what I want to do here is that there are two avenues to interact with me. One is via YouTube chat. Okay, so if there's any questions, please ask me there. I might not be able to answer all your questions, okay, because of time limitation. And the second way is for those in Zoom, you can ask me via the chat. All right. I will read out the questions and I'll let you know what's the question so that, because in Zoom you can't see YouTube and YouTube you can't see Zoom, right? And second thing is that I want to do it live. That means I don't want to look at the slides here, but I want to look at with the stock charts here. And this is what I've always been doing with my students, okay? Meaning that with my students, when I'm looking at the market, we're always doing live, okay? Because I don't like to prepare any slides, okay? So the first thing, let's answer whether Hong Kong is still a super bull or Hong Kong is bullish or not, right? I don't want to give you my opinions. I like to give you facts so that you can use it next time to analyze yourself. Okay, so what I have here is on top, right, is the Hang Seng Index chart, and at the bottom is a chart, right, which is of dollar versus CNH. Okay, so let me just explain why dollar versus CNH. Okay, here we go. Okay, so you can see that it's CNH here. This is Hang Seng, and then this is a weekly chart. Weekly chart means that every bar, you can't see the bar here, but every bar is a week, because this will allows me to do a little bit more of a longer term analysis, right? Now, why is it that I'm showing Hang Seng Index with dollar versus CNH? Okay, for only one reason, because if you take a look at dollar, SUD versus CNH. Now, what does this mean? Okay, if you see 7.27, it means that at the current rate here, every $1 can fetch you 7.27 CNH, which is the offshore renminbi. Okay, so for example, right, let's take a look at 6.8 here. So around 2023, we have the rates at about 6.8. Okay, so what this means is that every $1, okay, $1, you can change into 6.80. So let me ask you a question. Which one is stronger? Which situation is where US dollar is stronger? Is it number one, where US dollar is stronger, or number two, US dollar is stronger? Which one is stronger? One or two? I like to have interactions because in my sessions, I don't only like to give talk, right? I like to have interactions to make sure you understand. Okay, so if you can, do let me know what you think, right? Which situation is stronger? Is it one or is it two? What do you think? Which one is a situation where the dollar is stronger? Yes, it's one, right? Because one allows you to change every one USD to get 7.27 renminbi, which is offshore yuan. Whereas in situation number two, every $1, you only get 6.8. All right. Now, this means that if you are preparing to take your USD to buy into Chinese yuan, because you like to buy into stocks, for example, because in order to buy stocks, you have to have that currency. All right. So you say, I want to take the US dollar to go and buy yuan because I want to buy into Chinese stocks. Okay. So which situation will allow you to have more purchasing power? It will be number one. Because in number one, every $1, you can buy into 7.27 worth of Chinese yuan. Okay. Now, when this happens, what I'm trying to show to you is that if you take a look at where the yuan is, sorry, where you take a look at the situation where the dollar to yuan, right, is near to the 7.3 region, which is the high region, right? Each time that the dollar to yuan, you see that it's near to the 7.3 region. Okay, now take a look at the stocks. Take a look at the stocks. You realize that every time when the dollar to yuan, it's at the top, which is where dollar has a stronger than the yuan, right? The Hang Seng is inversely correlated. That means it's at the bottom. Okay, so here, somewhere around here, all right, Hang Seng is near to the low. Okay, now somewhere around here, Hang Seng is near to the low. Now, why is this inversely correlated situation happening? Now, this is because, all right, when the dollar is strong and is able to buy a lot of renminbi, okay, yuan, right? Then when they see that a market is undervalued, what they will do is that since the dollar is strong, right, versus the yuan and can buy a lot, so I will start to buy into a overly cheap market because I have more purchasing power. Okay, it's the same thing as, for example, why people go to JB to buy things, okay, and even to buy unnecessary things. That's because for the exchange rate, every one Sing dollar, you can buy 3.3 dollar worth of Malaysia products. Okay, so instead of buying maybe one pack of fries, you decided since it's so cheap, let me just buy 3 packs of fries. Okay, so it's the same idea here. So you realize that every time when the dollar versus the yuan is towards the 7.3 region, that's where you find that Hang Seng is near to the low. Now, the reverse is also true. Most of the time, when the dollar versus the yuan is at the 6.8 region or is at the low side, okay, you start to find that the market is at the high. Okay, why is that so? Because it means that, oh yeah, now we are able to see that this amount of money, all right, starts to get lesser yuan, right? And what you also realize is that when your stocks also increase in money, all right, in let's say for example, you already bought in the Hong Kong stocks or the Chinese stocks. When the stocks also increase, then you find that I can right now change my yuan with to the dollar using less amount. Okay, I can change into every dollar only 6.8 only. Okay, so it makes a lot of sense for people to sell the stocks and change that into the dollar, especially if the US market is at the low, for example. Okay. Now this relationship, right, you might find that is weird, but it has to do also with, for example, why Japan it's a very, very popular destination recently. Because it's so cheap to go to Japan. All right. Now, same thing for stocks. If you want to buy a stocks or you want to buy a market, you have to change into the local currency. Okay. So when I was looking at the Hang Seng Index at the start of the year, what I saw was that the yuan, okay, was near to the 7.3 region, okay, was near to the high point here, right? Okay, was near to the high point, right? So that's towards the start of 2025. And it sort of corresponds to the fact that the Hang Seng was near to the low point here. Okay, the Hang Seng had already retraced. And this was the point where I was able to say, hey, look, we are bullish into the Hang Seng Index. Why? Because of the technicals as well as because of the money. Okay. Now, so we want to ask one question. And the question would be, will the Hang Seng market or will the Hang Seng tech continue to move up? Okay. I think the question would be, has the dollar, one of the reasons, right? Has the dollar versus the yuan come to a point where it was low, where it is low? Okay, because we saw that, for example, during the 2024, all right, there was a chance, there was a stage where the Hang Seng tried to move that. Okay, and then after that, right, it's moved actually down a little bit, was a retracement here, right? And we saw that when the dollar was at the high, okay, all right, the it starts to move down, right? And that's where the Hang Seng actually rallied. Okay, it did this rally. So you see, it's coincide very well with the point where the dollar was near to the high. Okay, so that was where it was the first rally in 2024. Of course, that we saw it at the same time. There was stimulus from the Chinese government. Okay, but again, we saw the dollar, all right, was at the high versus the yuan, and that's where it gave to a point where the Hang Seng was at the low. Then the question would be that when you see the dollar versus the offshore yuan, right, was at the low, then the Hang Seng was at the high. Now, the question is to all of you, are we seeing that the dollar to the offshore yuan at the low yet? Yes or no? Are we seeing it near to the low? What do you think? Because high to low is relative, right? So let me just clean this off. High to low is relative, right? Yeah. Because we need to measure high to low as to what happened in the past. Okay, so in terms of recent low, we can say that, hey, look, this was a recent low of the dollar versus yuan. Okay, so this was a recent low of the dollar versus yuan. Okay, so these are all recent low, right? So we know that these are recent low, these are recent low, but the question is that, is this section here, which is right now here, right? Is it anywhere near to the recent low? Okay, so I think that we have not seen this coming yet. Okay, yes, I understand that the Hang Seng index has been correcting. You are not used to correction. But don't forget, if there's no correction, how do you enter? At a low, right? Because it's perpetually at the high, it doesn't give you a chance to buy. Okay, so we need to let it correct so we can buy at the low. Okay, so we just doesn't want to make sure that we are buying at the last stage, right? Okay, so if you look at the past correlation, and the correlation has been actually doing very well, it has been serving me and the community very well, because this is how we've been actually getting into the trade. So if you take a look at what happened in the past, right? When dollar versus the yuan at the high, we see that the Hang Seng is near to the low. We see the Hang Seng is near to the low. Okay, so every time we just have to answer relative to something, has it gone to the low yet, or has it gone to the high yet? So high or low is always a measurement to the past. So I want to be a little bit more careful when I measure. So the measurement that I can see for dollar versus CNH, right? It's around here. This is the first level, and that's really around the 7.15 level. Okay, and the second level will be around here. That's really around the 7. So we have not seen that the dollar versus yuan is there yet. Okay, so in this case, I would leave the answer to all of you to ask to tell me, right, whether you think that the Hong Kong market, the Hang Seng market, still have another one more leg for an up or not. Okay, so a lot of people tells me, hey Binni, when you are looking at the stocks, right? I mean, why do I have to learn about FX? The FX is a very fundamental way to look at stocks, because if you want to buy anything, all right, the first thing you have to acquire is you have to acquire the money. Same thing as you are going to Japan. All right, I know that now we can use e-payment. Everything is, we can do that, right? But fundamentally, in the past or even now, we still have to change to that currency. Okay, all right. So I won't answer whether Hong Kong market, it's still a super bull or not. Okay, but I'm giving you this tool here so that you can monitor. All right. Now let's do a little bit of a vote based on what I've analyzed. Do you think that the Hong Kong market still have another one more leg to go up? Yes or no? So I hope that this information is useful. Let's talk about the technical then. Okay. So in terms of technical, what the Hong Kong and Hang Seng market did right as it breaks to out of this range here. Okay, out of this range here, right? So this range here is how long? It's about uh 2022 to uh now, which is about a 3 year range. Okay, so it's about 2.5 year to 3 year range, right? So that is the um the duration of this breakout here. Okay. Now if you calculate, that means that how far it can move, right? So what we usually will do is we measure this range here. Can you see my drawing? Just want to get a feedback. I think you should be able to see, but I just wanted to know. Yes, I think you can, right? So we will measure this range here, and then at the breakout point, take this range to make a comparison. Okay. So what I'm gonna do is that I'm just going to take like not the extreme low to high, right? This is the extreme low, so this is the high. I'm just gonna take like a little bit of the mid range, okay, just to get a rough number. Okay, and since that this is the whole consolidation that you broken, I'm just gonna take this and then put it up here. All right, to tell you that how far it can go technically. All right, and then this would be the predicted level. As you can see, this number here, 30,500. Okay, so if you believe in technical, all right, then I think that um, Hang Seng, all right, might have the chance to go to the 30,000 region here based on the measurement. Okay. Now, the other way that we are doing is, of course, that we have our own indicators, all right, that I've designed. So this is our indicator here, right? This at this moment, just to do a little bit more. Okay, so at this moment here, what is resisting the Hang Seng as this level here, which is what has been predicted here, right? Which is about 24,600. So this is the place that is resisting the Hang Seng. Okay, but if this level can be broken, that means if price can actually moved above this level here, all right, then I think that we might see this number. Of course, it takes time, but do monitor very carefully to see whether the dollar versus CNH is near to the region of two numbers, okay, 7.15, 7.15, and 7. So these are the two big numbers that you have to monitor for the dollar versus CNH. All right. And of course, that technically, the level here that you see here, all right, must be broken. That means that 24,600 must be broken. Okay. So maybe you ask me again that what are the numbers that I'm looking at? Okay. So the predicted levels for Hang Seng in terms of support level is around this level here. So that's about 22,500. So this is the predicted level. Okay. All right. So for those in my community, for those my students, all right, who have the top pro, you will have this number here. All right. And today I'm just providing a fundamental analysis on whether Hang Seng will still continue to move up and whether this is going to be a super bull. It's going to be a super bull if, all right, that's this 24,600 each level can be broken. Okay. If not, then we probably have to wait for it to go down again. All right. And then to see what happened. As long as the dollar versus CNH doesn't go below 7.15 or $7. The key number is not 7. Okay. Any question here before I move on? I will just let you come up with questions while I will continue with the rest. Okay. Just to have a bit of interim while you continue the questions. So we have two courses here. Why am I moving on to the courses? Because whatever that I've showcased just now in terms of the levels, they came from tech, which is my latest creation. I won't say tech, it's my latest creation where I program it, but I've been actually using it for about 10 plus years already. So for those who were with me in TIFO times, you were wondering why am I always like so accurate or so tuned, right? Was because of tech. Okay, so what I'm gonna do is I'm just gonna share with you some traits that we did, right? Based on tech. Okay, so we entered into the Hang Seng index and the Hang Seng Tech, right? The start of just slightly after Chinese New Year. Okay. So how do we enter? Because this was like an upthrust and up move, right? And then price retraced. So what I have here was tech, right? Is has already broken above the resistance level. So these are the resistance level, right? So price has already broken. So our entry into Hang Seng was also around here, about 21,000. Okay, and I mentioned the entry to my community around here. In fact, that some of them had already entered around here when it first break the 20,000. Then after that, right, another re-entry around here. So just to let you know, for us, right, we always attempt to buy when it moved down. Okay, when it moved down. So this is to prevent ourselves from getting caught at the high, right? So this would be our predicted support level. Okay. Okay, so that's how we enter into Hang Seng Index. So one question is, do I mean by I monitor both top and bottom charts? Because the bottom chart is dollar versus CNH. So there's probably at this moment only two levels for you to monitor. One would be 7, which is dollar versus CNH at $7. The other one would be at 7.15. So these would be the two numbers that you want to monitor. Meaning that the whole idea is Hang Seng is at the high, okay, will be at the high if the dollar versus CNH is at the low. So what is low? Low to me, it's two levels only. One will be 7, the other one will be 7.15. Okay, so you want to monitor when dollar versus CNH is at 7 or at 7.15, right? You want to monitor whether Hang Seng Index it's a little bit weak. Okay, so for my community, I will monitor for them. So when I see it, I will let them know. Okay, all right. So let's continue on. So this is Tencent. I'm not sure any of you are looking at Tencent, but same thing, you know, this is how we always enter into a trade, right? So we look at the orange line here. So this was our entry in Tencent, about 404 because it already broke the resistance. And then these would be the predicted support for Tencent. That means that we are not buying at the high here because it's just illogical to buy at the high. We'll be looking for price to come back down for a buy. Okay, and then that predicted value is about 481 plus minus around that. So if you had been trading with me last year, then we went long on Tesla. So this was one of the famous Tesla trade. But I mean, if you are trading with me now, then you also know that we've gone short on Tesla up on top there. Okay, so it's the same method. Orange line, break above. Okay, so this was Bitcoin. So we also trade on Bitcoin, also using the tech levels, also using the same orange lines here. All right, and that was our buy signals for about 65,000. And just last year in December, when I met some of the students, I already told them that I've sold out the Bitcoin at about 90 plus thousand, near to 100,000. Okay, so that was gold. So gold was our best trade for this year and last year. So gold is right now, as you know, $3,000 already, 3,050. Okay, and I just covered gold just now. Okay, same thing. Gold, we are using the same method to enter again and again on the long side. Okay. Lastly, this was Hang Seng Tech. Take a look at this number here. So same thing, right? We long Hang Seng Tech around this level. Right? Take a look at this number. Tell me what is this number here? Can you see? 5,360. 74, right? Or 5,337. So these are the predicted numbers for us to enter into Hang Seng Tech. So how we do is that when price move up, it becomes a predictive number. Okay, we always, right, want to enter when it's moved down. So tech monitored and predicted this number for us. Okay, and you want to know the outcome? Okay, let's take a look at the outcome because I have um, uh, also talk about recession. So let me just go through the Hang Seng Tech a little bit, right? And then I will go through, all right, the recession part. So this is Hang Seng Tech, 5,554. So at that point of time when we were just around here, so this was the predicted level. 5,000 plus level here, Hang Seng Tech, and then it rebounded from here to moved higher. Okay. All right. So that was the movement here. Okay. So let me just tackle the next part. I like to do things quick, fast. So the next part here. Okay. So before I move on to the next part, any more questions? I was just doing a little bit of an advertisement to wait for your questions. No? All clear? Okay. Now, next part is recession. Okay, so first, I know that you can't raise hand, but just give me like uh, an indication. How many of you think that recession is coming? Just give me an indication. How many of you think that recession is coming? Because it's not the first time that I talk about recession. Those in Zoom, those in YouTube, no idea? Or you don't really care about whether recession is coming because what you're interested in is that what's going to happen to my stocks? Okay. So you see, sometimes when we have recession coming, actually we don't feel it. All right? Okay. And you realize that what happens in the past, okay, past 10 years at least, or past 12 years, since 2009, all right, where we have the US financial crisis, all right, you realize that every time there's any sign of a recession, the market will just react first, and then the Fed will come in to do what? The Fed will come in to cut rate. Okay, so that always been the cycle. Okay, so that means that when there's inflation, they raise rate, and after that, right, they'll go and cut rate. Okay, but again, what is happening to the U.S. market right now is that um, they are in a stage where it's hard to cut because then they needed people to buy their treasuries. So if they cut the rates, then the treasury yield would fall and will not be very attractive. Okay. But if there's recession coming, they can't not cut rate. Okay. They have to do something about it. All right. Because the stock will start, correcting. So the question is that recession sometimes is just a number. Okay. But more important is that the effect that it it brings to the stocks. Okay. Not the actual effects, but more of a fear effect. So this is the key that I'm going to address here, right? So there are a few things that I want to address here. Is that two things are one, I want to address that in the recession and implication to stocks, and recession, if there's a rate cut, then what would be the instruments that you're looking at? Okay. All right, I won't say risk free lah, recession free type of a uh instrument. Okay, so let me just turn off a little bit more things and then just go here now. So first I want to address whether we're gonna have recession, okay, or rather the market is going to look at whether there's recession, okay, and the fear that the market is going to induce itself from this recession, and then what is the effect on the stocks. Yeah. I also don't care whether there's recession or not, but then obviously it's going to create some fear. So I need to address that. Okay. So to know about recession, what we do is that we can take the 10-year US 10-year U, okay? We can minus that with the US 2-year U to look at the difference. Okay. When you look at the difference, then you will know that whether the U is inverted or not inverted. Okay. So this would be the formula here. Okay, so that will be the number. Same thing, I want to take a look into the weekly chart because I want to have a look into the longer term movement. Okay, so let me just explain here, right? So by right, that 10-year U, it's going to have more higher rates, right? Because if you put your, let's say, your fixed deposit for 3 years, you're going to have more interest, all right, than versus if you put for 3 months. Am I right to say that? Yes, okay. However, you realize that now the banks are starting from 2 years ago, right? The banks don't like you to put too longs. Okay, what they do is that they will offer like maybe 9 months or 10 months. All right. And then if you want to put 2 years, in fact, the interest would be lower than versus if you were to put like 10 months or even if you put like 6 months. Okay. So why are they doing so? They are telling you that they think that in the future, the interest rate is likely going to drop. All right, so they don't want to give you so much. Okay, now by right that the longer term let's say bonds, right, treasury yield will give higher rates, but when you have a stage where the yield curve is inverted, and this conversation or this topic was very hot, right, about 3-4 years ago, then it's gives hint that the market is really not too interested to buy short term, but more interested to lock in long term. Because U, right, is such that when the U is up, the rate is the U is up, right? Then the bond is down, right? But if let's say the market keeps buying a bond, right, it will cause the price to go up and it will cause the yield to go down, right? So when you have an inverted yield curve, all right, this means that the longer dated bond yield, 10-year yield, right, give less interest than the short-term yield. Okay, so in other words, right, if I take the 10-year bond yield minus the 2-year bond yield, right, anything that is less than zero, so this is a zero line, anything that's less than zero, anything that less than zero would be the stage where the yield curve is inverted. Okay, so likewise, the yield curve has been inverted for the most of 2023 to 2024. All right, but it's not important to just look at this because it's meaningless. What I would like to do is to compare that with, for example, the S&P 500. So I'm just going to look at this from the S&P 500 to see what's the implication here. Okay, so let's take a look at the recent situation, right, where the bond yield starts to get inverted a little bit. Okay, inverted a little bit, right? So that was here, right? You realize that when the bond yield gets a little bit of inverted, so and then after a while, right? After this period of time, the market actually corrected. Okay, it corrected after a while. Okay, so let's take a look at the next next period where the bond yield was inverted. So inverted, the market went up a little bit, but after a while, the market starts to correct. Okay, and you say, hey, look, seems like the bond yield is not important. But actually, what is more important, it's not when the bond yield gets into the inverted situation. What is important is when the difference between the two bonds, all right, gets normalized. That is the key thing here. It gets normalized. Okay, normalized means that the stage, right, that it enters into and above into zero. Okay, that's where the 10-year U, for example, the longer term U, right, is no longer having a lesser interest rate. Okay, that means it's gone normalized after you have inverted. You realize that after you've gone normalized, the market starts to move down. Okay, all right, so let me just show it to you. Okay, so this was where it's near to inversion. Then when it gone normalized was around here, that's where it starts to move down. Okay, so the next time that was during the 05 and the 07. Okay, so it went normalized a little bit, See that? And it starts to come back down. Then it went inverted again. And after that, right, when it went normalized, which was around here, so that was the top of the market. And then it starts to correct. All right. So the next question is dong, 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 dong. All right. It's normal, 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 normal. And that's where it went into the inversion stage here. Okay. So it went into deeply inverted situation. Okay. We have that. And it's just gone normalized here. Okay. So the key thing is about it gone normalized, right? So if you read a lot of literatures, when it gone normalized, all right, that's where a recession will happen about 6 to 12 months, or even sometimes about 15 months, right? After it's gone normalized, this is where a recession will happen 6 to about 12 months, okay? After the inversion gone normalized. Okay, so this is where the recession will happen. Okay, but if you take a look at what I said earlier, but after it got normalized, this is the stage, where the stock market will correct. Okay, all right, and it seems that the stock market sometimes doesn't correct immediately. It might correct just after a while. Okay, so from the past, it seems that the market will correct after a while, right? And it seems that right now the market is correcting at this moment. So this is that correction stage. Okay, all right. So if you find that the market is correcting, then this is not unusual. Okay, because it has to do with talks that there is a recession. There might be a recession, all right? And then because of this, the market gets into a little bit of a fear. And also because then the market has actually been trading for a while, right? Up for a while, right? For quite substantially a while. So if it's correct, if it's now in a correction mode, okay, so this is not unusual. Okay, and we do have the bond market supporting that correction. We do have what happened in the past supporting that correction. So I think that if you are looking at from the point of the 10-year versus the 2-year U, then we are in a corrective mode already. Okay, so I'm just going to pause here for a while and then wait for your questions if you have. Because I know that the next question you're going to ask me, right, then how far is it going to go? I prepared that for you as well. All right, but in any case, that if you do have any questions, you let me know. Okay, because these are usually the things, right, that I update my students. That means that if I don't run a special webinar, all right, then we are always updating our students. So for that correction, it wasn't uncommon to us. We already saw this correction coming. Okay, so you have no other questions. What I'm going to do is I'm just going to remove this 10-year and 2-year U, all right, to just focus on how far it will go. So does that mean that stocks will no be going higher from now? Okay. Now I didn't say a crash. I said a correction. That is the whole thing here, right? Because some people might be using this correction to go and enter a trade. All right. So I do not know what you have. So it's very difficult to say that whether you sell everything or not, right? But yes, as far as what we are seeing here, all right, the correction has already started. Okay, because the 10-year, the U, right, starting from here, right, it's already above zero. So that was something that I already told the students to be really very careful. Okay, so I have no questions on the U. Let me just move on to talk about the index only. Okay, just hang on for a while. Okay, so this is the index which is on NASDAQ. So I just going to only cover NASDAQ. Okay, I won't be touching on the S&P 500. All right. And what I like to do is I like to turn on, all right, tech, because what we've been doing is that we've always been using tech to analyze, all right. Of course, that tech is rather than you have, I mean, my point is that rather than you have no system to guide you, what tech is doing, it's actually guiding us in terms of our analysis. Okay, and this is what I've been doing like every week, right, for 7 days, 7 times, right, with the students to guide them on how we are reading the market. Okay, so for example, this was NASDAQ again on the weekly chart, right? So if you see how we enter on Tesla, how we enter on the Hang Seng Tech, right? So we always enter after it has corrected. So a correction is actually good for us because it allows us to wait for the low point and then to buy in when price just went up. So this was a resistance level, and then the earlier round, our entry was around here, all right, because we actually bought in after this correction here. So this is exactly live on how we use tech. Okay, so I'm saying a correction, I didn't say a crash, right? So this is still an uptrend. Okay, so why is that so? Because if you take a look at from the point of a trend point of view, right? So this is a low point. So this is a higher low. This is a higher low. So this is a higher high. So this is a higher high. So this is a higher high. So all in all, it is still in an uptrend. Okay. Now, when we spotted the correction, all right, there are a few things how we do that. Number one, right? To us that it was a high, but more important, we saw this was a double top. Okay, so there wasn't an occasion in a high where there was such an obvious double top. But again, that it broke our first support level. So this was a support level of this uptrend. Okay, so the green line is the first support level of this uptrend. Right, now the second level, all right, of this uptrend is this level here. All right, the level is about 19,000. Okay, I have this exact level that's being measured here. So it's a support level, right? So in other words, right, if this green level is broken, okay, meaning that price boom, below this green level here, then this whole uptrend would be broken as well. Okay, that's where we're going to have a deep, deep correction. Okay, so that is from our analysis point of view. All right, so has we seen the tech stocks showing that? No, we have not. We have not seen it yet. That means that it hasn't broken yet. All right, so I'm not able to tell you that whether it will be broken or not. Okay, because the assumption is that if it's not broken, it should be assumed as being supported. So at this moment, it is being supported. But is the trend strong or not strong? No, it is not that strong because it has already fallen out of the first support level. So this was the first support level here, right? So this was a final and ultimate support level. It has already fallen out of the first support level. In fact, the first support level is a resistance level. All right. Okay, so this is so far our analysis. And also one thing that I like to share with you guys is that the market will always go through phases of up, down, up, down, up, down, and then a series of a huge down. Okay, so this it will always go through this kind of phases. Okay, so for example, in the past, same thing, right? Probably you can't see very well, but then you will always go through up, down, up, down, up, down, and then a huge down. Okay, you go like up, down, up, down, up, down, and then a huge down. It will always go like this, right? Up, down, up, down, up, down, up, down, and then a huge down. Oops, huge down here, right? Okay, so most important is that after the huge down, are you able to recover to enter? Okay, the trade. So that is the most important here. So when you have remarks, when people have remarks that I'm waiting for the market to crash, all right, so I can buy in, same thing, right? You want to know that, okay, when is the end of the huge down and when you can actually buy that in. Okay, I can only say that since the support isn't broken yet, so there isn't that huge down yet. Okay, but so I have to assume that the trend is still up at this moment. Okay, so let me just answer the question. When the stock market corrects, does the dollar lose strength as well? The money is separated from the stock market, but I think that it's always the dollar that coins. It's always the dollar all right, that affect the stock market in a way. Okay, because let's say for example, you think that you think that the stock market is high already, you start to sell, right? And that's where you don't want the dollar because you sold your stocks and you don't want your dollar, right? Um, so in a way that you're gonna see a lot more clues right from the dollar. So you want to see this clue from the dollar, then you look at DXY. So we are always checking the DXY. In fact, that just something to share, which is always something that I always cover, is that the DXY is here, right? In fact, the DXY uh, drops, right? Um, Start of Jan. Okay, it's coincide with the drop of the NASDAQ and a lot of the indexes. It start of Jan, right? So if you take a look at the NASDAQ, okay, it also starts to correct somewhere around Feb. But the dollar starts to correct first. Okay, the dollar starts to correct in Jan. Okay, so the dollar always precede the index. How can we do to capitalize the market correction? I think that we were talking about shorting already. We already been shorting the market. All right. How will it affect the Hong Kong market? I think that the US market, if the US market is being sold down, all right, money has to flow somewhere, right? So I guess the money has to flow to an undervalued market. So in Hong Kong at this moment, I don't see a lot of funds, international funds, entering yet. Okay, because I think that the U.S. market is still in an uptrend, right? Is there any cases where there's no correction when you normalizes? We have not seen that. In fact, that we've seen that when the new normalizes, it has already corrected this much already. Okay, I think that it's a question of whether this support level will be broken and how deep is that correction. Okay, just to share a little bit more, is that this is something that I haven't shared with my students yet, right? That if you take a look at the past, okay, I know that it's a bit tough, but anyway, here we go. Okay, if you take a look at the past, where we always use the higher low and the higher high, right? So these are the higher lows, higher low, and the higher high, and the higher high, right? So in the past, during the 2022, we saw the lower low being made. Okay, we saw the lower low being made, and then once it goes up, it has a lower high. So this is a typical reversal move. All right. Now, what we are not seeing here, we are not seeing that this low is being broken. That means that we are not seeing price going a lower low yet versus this one. Okay. So this is still positive, still good. Okay. But what is not very good, right, is that when price is trading here at this point, right, if we compare that to a recent point, okay, so this point here, right, then indeed that price is actually making a lower low. So this is the point where I'm not too happy with the US indexes, because it has actually made a lower low based on the more recent point already. Okay, so I'll be observing that if price moves up, okay, and it made a lower high here, as what we've seen here, like this, then this could be a sign that this support level will be broken. Okay, of course that if you're in my class, then I'll update you if I see a lower high, and then if this level is being broken here. Okay, so I'm suspecting that we might see similarity to what happened in 2022, because in 2022 there was a little bit of a U curve normalizes. But anyway, if you are just basing on technical, then at this moment, the fact that it is below our key support level here, it is not a very good sign. Okay, all right. Any questions on the US indexes? If not, I want to move on to this section here. Okay, if there is a recession, all right. I mean, I don't know whether it's a recession or not, right? If the market thinks that there's recession, the market thinks there's recession, all right, and then the market might suspect that there's a rate cut. Okay. Now, if there's a recession, if there's a rate cut, then what are some of the traits that are working well in a recession, or that might be working well in a rate cut? Make a guess. I will share with you what I've observed. So my question is that if there's a recession, okay, if there might be a rate cut, then what are some of the trades that might be working well based on this theme here? Let me know. Yes. Yes. Very good. Very good. Yeah, I think that you got it. Yes, utilities is one of them. Uh, Gold, yes. Healthcare REITs, yes. Okay. So let's go through one by one. So what I have here as first thing, let's cover on the REITs, on what I always look at. Okay. So this is a an index on REITs. Essentially, this is NAR REITs, which is basically on mostly about 50+% on Singapore REITs, and then ex Japan, no Japan REITs, but mostly Singapore REITs, plus also some India, some Hong Kong REITs. Now, if you take a look at this index here, it doesn't have dividends adjusted, okay? But if you take a look at this index here, generally it is going downtrend, okay? Meaning that since the stage, the time that we had COVID 2020, and then subsequently we have rate hike, blah 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 blah. It's just one direction down, okay? Now, but for quite some time, meaning that since 2023 October here and to here, which was mid 24, and somewhere around here, we've seen that the index basically got supported. Okay, it's supported here. All right, so this is the first time that it's being supported. The second time is being supported, and then this is the third time. Now, once bitten, twice shy, but then this one is like 3 times already. But again, that only at this period of time, which is now, then we start to talk about a potential rate cuts. Now, my point is that there might not be a rate cut after all, okay? Because then with Trump, he likes to talk, and then he likes to talk it down. As far as what I've analyzed and then shared with my community, the rates are really coming down. So we started to look at REITs about 2 weeks ago. Okay, that means that we started to look at REITs 2 weeks ago, partly because I explained to them that I've been observing the rates, and then this is where I saw that finally the US 2-year rates 2-year U, okay, 2-year U is making a reversal pattern. It's finally heading down. So I won't be touching about US 2-year U, um, but just zoom in directly, then the REITs as showing sign of reversal. Okay, now so this is the weekly chart here. On the index, but if you ask me technical, for example, technical stuff, right? Then this is the range. So if you're buying near at the bottom, all right. If you take a look at the average yield of the REITs, about 5 to 6%, I don't think that we are too wrong, okay? Because that unless that technically it's gonna break below this level here, All right. Otherwise, there's a lot more room for price to move higher. Okay. Um, if I'm not going to touch on individual REITs, okay, maybe that I can do another sessions to talk about individual REITs. But if you are mainly focused on Singapore, all right, then in Singapore we have the ETF, the REITs ETF, right, that you might want to explore because there are some REITs ETF uh, that focus on having a similar structure as versus this index, yeah. But there are also some REITs ETF that focus a little bit more on other REITs. Okay, so I told my students and my community that I'm always more interested into healthcare and into data center REITs. Okay, so that always been what I've been doing. And in terms of the REIT ETF, you can just maybe just ask ChatGPT or just ask DeepSeek or whatever. They'll be able to give you a list. Okay, is this CFA REITs ETF? CFA, yes, CFA is a REIT ETF, right? But they have different prices, different charges to it. So and different dividend yield. So you might just and different composition as well. Okay, some will have more into certain holdings. Some will have less into certain holdings. All right. So REITs is one of them, which I think that whether even if there is a recession, okay, and then very soon uh, the policymaker will come in to sort of save the market with rate cut, then the REITs would benefit from this rate cut and would be benefiting from the story of a recession. Okay, all right. My stand is that whether there's recession, I don't really care, but then the story will flow and will drive certain price movement. All right. Now next, you also make a very good guess, and next would be gold. Okay, so next would be gold. So let me just talk about gold here. Gold is just 3051. Oh my gosh. Um, well, you see, why is gold uh recession proof? Okay. Now there are two stories on gold right now. All right. One is something that I've been talking about, which is Trump is going to revalue gold. By revaluating gold, right, that the treasury owns. Right now the treasuries is uh, um basing the gold value at 42.22 per ounce. Okay. Per tons, okay? But right now gold is trading at 3,000, right? So if Trump is to revalue, then Trump would be able to go to the Fed to get a lot of money. And how much money we're talking about? Estimated about 75 to 80 billion, okay? Now, when this happened, right? Uh, uh, the US would have a lot more money to spend. Okay, so they might not need to um, decrease their rates. Okay, but this will only result in one thing. That means that if the US Treasuries is to revalue gold, all right, then gold would have to move up. Okay, because right now gold would be valued at a much higher price. Okay, but not only that, if US Treasuries is really going to revalue gold, suddenly they'll be flooded with lots of US dollar. This would mean that the US dollar would start to get less and less useful because of its value. Suddenly, with huge tons of US dollar flying in the market. So the only thing, right, that the market recognized that is of true value is actually gold. Okay. I know that it's really tough to get into gold right now for long-term investment because a lot of people have been asking me, hey, look, what is the price to get into long-term investment for gold? I'm not able to answer you guys because my purchase of gold, it's around $1,002 was the bulk of my purchase of gold. Okay, and I actually not been I've been holding gold. Okay, my minimum prediction of gold is at $3,250. So that was my minimum prediction. of gold. But if Trump is really going to revalue gold, then I think that gold would be so much higher. So it's very difficult to give you a number on whether you could go for long-term investment or not. Okay. But any retracement in gold, okay, if you are looking at trading, would be actually a good level. Okay. All right. So I repeat this statement here, right? Any retracement in gold would be a good level for trading. Okay, that means that in my community, we have only one direction in gold, and that direction it's only to long gold. That means that we are not even looking at shorting gold. We don't know how to short gold, and even if it comes back down, all right, it's still a buy for us. Okay. Now, so in this case, if you are looking at gold, all right, then we have two levels here that is automatically being predicted by our system, which is by tag. All right. So it's around this level here, 2914 to 2933. So that would be the gold level. Okay. All right. Well, don't ask me why we are able to come up with this number, but so far this number is a very strong number if you ever see that gold is up there. Right. Of course that we also still want to see reactions here at this number. That means that we want to see that price can rightfully rebound from here so that it can move to greater heights, and I mean towards the 3,250. Okay. Gold is near the all-time high. Gold is not really doing a lot of correction. So when gold moves down, all right, it becomes like a trade that we are definitely looking at. Okay. Any question on gold? Okay. Now, I'm just going to quickly just mention a little bit on copper, because if you take a look at copper, right? Okay, just quickly, okay. Then what happened to copper is that copper has, as of now, okay, because of maybe tariffs or whatever thing, right? But anyway, right, copper has already moved above the all-time high. Okay, move around the all-time high here. All right. So it seems that matter, right? Whether it's copper, whether it's gold, or even silver. Okay, SAGUST, silver. Silver is more of a laggard, right? Silver, it's not really moving to the high, but then silver hasn't been too weak either. Okay, so you see the consistent trend that silver, copper, gold, all these are a little bit more of the value thing, right? It's actually moving. Okay, so these are all traded against the US dollar. So there's only probably one thing that this market, they are telling us that the US dollar is going to get weaker and weaker. Okay, so this in a way ties in very much with what we are seeing in Hang Seng. That means in the Hong Kong market. When I said, right, the dollar is getting weaker and weaker, all right, would also means that there's a chance for the Hang Seng market to go up. Okay, and we haven't seen the dollar at the we haven't seen the dollar versus CNH at the $7 yet. Okay, so that's why my opinion is that the Hang Seng should have more room to go up. If you take a look at, for example, the dollar versus Hang Seng and the dollar versus gold and what everything is pointing. Okay, so I guess that uh, what I'm trying to say today is that stock is likely, US stock is likely going to correct further, and then the gold is likely going to go up, and as well as the other matter, and then because of the relationship which is US dollar, the money is probably going to just flow out of USD, if USD is going to weaken. Okay, so I'm not taking profit. Okay, I'm not taking profit for gold. In fact that I mean, if Trump is really going to revalue gold, then I think that gold would really have a potential to go to 5,000. I mean, even 10,000 is still possible. I mean, that I don't mind sleeping with my gold bars. Anyway, so my students know that I have tons of them. I mean, sorry, not tons, but I have some. Uh, and don't really mind keeping the gold bars for my for me to patch my teeth. I think so. Yeah. Okay. I guess that silver is still different from gold. Okay. Gold is really how to say a retain of uh, mm, uh like fights inflation, fights recession, fights almost everything. Okay. Um, I think that for BTC, it's not really catching up at this moment. I think that gold is something where the market feels a little bit more safer. Yeah. Okay. Not saying I'm not into BTC, but then I feel that gold is probably something where I would want to have. Okay. All right. So I'm just gonna cover this too. All right. Today I also covered a little bit more on oil, but then I will just keep the oil to the next session because I'll be doing another one more session in April. Okay. Do let me know what you would like me to cover. All right. In any of this session, do let me know. You just write down and I get your input, and then I will just consider that in. Okay. So for those in Zoom and for those in YouTube, let me know what are the things that you would like me to cover. Okay. So that I can do it. But I just like to use about 3 minutes of your time, or maybe 5 minutes of your time, right, to go through the course I have here, because I'm just gonna skip some of them. All right. But just to quickly go through what I have to offer. All right, and to announce a little bit about what I have to offer, right? Okay. Now, so a lot of you guys are very excited about the new AI that I'm going to launch. Yes, we are going to launch the new AI. All right. So, but before this, just about last year, I have launched the new course, which is on Top Pro. Okay. So Top Pro are the tech levels. Okay, are the tech levels that you saw just now. And it was useful for any trend, any instruments, whether you are doing US stocks, and it gives you the optimal level and to buy or sell, and it's predictive. Okay, so this is Tesla just about when huh? About maybe three weeks ago. So we predicted that Tesla was around this level here at 208. But the real prediction of Tesla is about 180, just to let you know. Then from here, Tesla actually bounced up. Okay, so you can just go and check. Okay, so these are all the predicted levels. This is Alphabet Google. At 162 is predicted, and it bounced up to 170. Yesterday it went down a little bit, and I think that it's probably going to go up again. Okay, but anyway, let's see, right? This is Amazon. It's about 192. Amazon was trading about 205 around here. Yesterday went down a little bit, but then these are our prediction here. And lastly, this is NASDAQ. That's what I said here, right? Something that I didn't include was just to show you a little bit on the live thing. So if you are looking to trade into with us, all right, then okay, we just okay, yeah. So another trade that we did recently was this guy here, which is Nvidia. So Nvidia, we predicted that it was about 105 here, and then it bounced up, all right, to 122. Okay, so if you say that Binni is always doing on FX, that's not true. Okay, we are doing on anything that is low hanging fruits, meaning that which are good and easy to make money. So that's my style. All right. Okay, so what we offer is coaching. I think that we have a lot more coaching than any other people. We are really very hardworking, and then we have a course fee that is fully refunded. All right, so these are our coaching schedule. It's 7 sessions a week. I'm rushing to end the session because at Thursday, 9 p.m., we have another session running for my other students. Okay, so these are all the sessions that we are doing in a week. All right, 7 of them. Okay, so what are the promotion? Now, please remember the due date is 31st of March. We are not joking because for this package, I have not received a renewal yet from the broker. Okay, meaning that we might not get this deal anymore. Okay, so this is the first course that is being offered by us. It's called Tor Plus. Well, you need to have this, and then you would have the strategy. All right, so that is the alien wash strategy, which is called wash and rinse. And then we have the complementary 12 months, the robots and indicators that I didn't cover here because I don't have time. And then we have the 12 months, the hand holding. All right. Now, what is great about this is that about the cashback deal, right? So meaning that if you pay us $1,200 in cost fee, then by doing minimum commitment, then the broker, which is called XC, will give you $1,200 cash back, would also cover your first $500 of loss, and then will give you 210 USD in terms of VPS. So the total deal is 1,984, right? So what must you do? So you must use our link to open an account, or you must be already assisting customers, and then you said you want to join Terrasis or you want to join Binni, and then you must fund 5,000, and then you must trade 2 standard lots, and you must do it before 31st of March. Sorry, this one is a typo. It's the 31st of March, right? You don't need to open an account before 31st of March, because there's a 3 months, how to say, 3 months duration for you to open. But it's safer for you to do that as soon as possible in case that we really lost the deal. Okay, if you do it before 31st of March, you still can lock in the deal. Okay, so what is this cashback? Cashback means that you do get a cash of $1,200 into your trading account. All right, it's equal to you never pay for this cost fee. Okay, all right. If you have forgotten when is the due date to trade, please check with our staff, the support staff. Okay. Now, when you fund 5,000, this is your capital, and you really will be using your own capital to trade. All right. This is your money. All right. When you trade 2 standard lot, it's very easy to meet the criteria, and you can meet the criteria in I would say 2 minutes. All right. Yes. So essentially, this is free. Okay. So that's the reason why I think that I might not get the deal anymore. I'm not sure whether I can get the deal or not, but I just want to ask from our existing students, okay, whether this is a scam, because a lot of people thought that this is a scam, right? How can it be so true? So for those existing students, if you have gotten the deal, please type something so that to let them know that this is a very good deal. Okay, thank you very much.